Hi everyone, so in today's video I'm buying the bonds, and for those who not familiar with this definition, this is the representation of a debt. So I'm buying debt, somebody would owe money for me and will need to pay that money in the end of the period of that bonds, and during the period of the bond they will be paying interest to me. So the reason I decided to do it now, and as you see on the screen that I have in my portfolio two bonds issued by American government, this U.S. Treasury government notes with the maturity for 25th year and 24th year. And as you can see that when these bonds were issued, the interest for them was 2.75, 2.625. And during the last 12 months, US government was increasing the Federal Reserve, which is the equivalent of a national bank for the United States. They were increasing interest rates, and recently the peak, the current interest rates issued by Federal Reserve is 5.5%, which is much higher, right? It's twice bigger than the interest rate for the US treasuries I have in my portfolio. So how the bonds prices actually work? So as the interest rate go higher, right, like to 5.5, the previously issued bonds with a lower rate, they become cheaper, right? Who wants to have the debt which pays 2.75 if now the interest rate is 5.5? So the today issued bonds, they are issued with the interest rate of 5.5. So then if Federal Reserve increases interest rate, it makes the previously issued bonds cheaper. And this is the reason I think when the rates were 5 or maybe already 5.5, I decided to buy the US treasuries into my portfolio, because obviously there should be a ceiling for the increase of this interest rates. And once they will start putting that down, all the bonds market will start to grow. And the last interview made by the head of Federal Reserve, he made it clear that they consider to stop increasing rates, and they want to see how the labor markets will be doing, how the GDP of American economy is doing. So they definitely don't want to harm economy a lot, and interest rate definitely slow economy, because it's harder to borrow money. It's harder to borrow money for businesses to hire new employees, to open new facilities, etc. So he made it clear that they will pause increasing the rates, and analysts tend to think that they will start slightly decreasing interest rate in the next year. So what does it mean for bonds market? It means that once the interest rate will start decreasing, the price of all the bonds will start growing up. And as I already have the US Treasury notes, I want to show you how you can also get an exposure, how you can invest into debt using ETF. So there is the ETF called TLT, which, and we'll look at the descriptions in a moment. Yes, so this ETF, this fund seeks investment results that correspond generally to the price and yield performance of the long-term sector of US Treasury market, blah, blah, blah. So this is the fund which buys US Treasuries to its portfolio, and this fund has its own shares, its own stocks, which are being traded on stock exchange. So if we look at the current chart for this ETF, we'll see that it is pretty pretty down during the last several years, and as in starting from the pandemic, the interest rates were very low, up to like zero, and then after 2022, Federal Reserve started to increase interest rate, which made the entire bonds market go down, right? Because all the bonds which pays like 0 to 1% are not as interesting now. If now you can get the bond which pays 2% or even more, so now it's 5.5, and as you can see, the market is down like 50%. This ETF is down like 50% since Federal Reserve started to increase interest rate. And as the last interview was about they considering like pausing the increasing of the rate, and they will probably start decreasing this rate next year. It's a good time to buy this ETF, with the estimate that the market this security will start to rebound during the next year. I definitely don't expect it to be like drastic, like one candle up for 10%. No, it will be a steady growth. So I definitely want to see that in my portfolio. So I'm buying TLT, and you'll see now how to do it.